All right, everyone. Thanks for tuning in. So, people look for trading ideas. Think you got one here in gold. Let's talk about it. Gold. Now, as we know, or as you should know, if you follow me or if you're a member of the Benzinga Trading School, some price levels are more important than others. It's the way markets work. Sometimes we know why that level is important. Most of the time, we don't. But it doesn't matter. If we know where they are, it's like a map to the market, map to profits, I guess you could say. If I was like, doing some late night QVC selling, I'd be like, oh, here's your course. It's a map to the markets, blah, 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 blah. All right, enough of that. So check it out. Way back in August of 20, what happened? Gold rallied. This is when everyone was buying it after um, COVID, because the consensus was the stimulus money is going to cause inflation, which it did. But this shows you how the crowded trade could happen too soon, right? If everyone and their mother is buying it, well, the market runs out of buyers. And once everyone has their gold position, if no one's buying it anymore, the only way it can go is down. But we peaked out right around 2085. Now, let's go to March of 22. Where did we peak? Oh, look at that, right around 2085. How could this possibly happen? How could a market that's worth trillions of dollars, that's where so much stuff is going on, all the stars kind of line up and all the planets line up, and we form this resistance at this precise level? Well, it's not because of the stars. Well, maybe it is. I mean, that's probably a little bit beyond my pay grade. Who knows? Maybe some weird gravitational pull then going on. But the way I see it is that there's just a bunch of people that bought gold back here who are mad at themselves because they bought it at the top, and then thing goes down, and they tell themselves, this sucks. I'm not going to sell my gold unless it gets back up to my price and I can sell it at break even and get out of this position of break even. So here we are way later, March of 22. So August of 20 to March of 22. So 18 months. And we get back up to there. And guess what happens? Remorseful buyers come out of the woodwork and start to sell. And that puts a top on it. Markets go higher because there's not enough supply or sellers. So buyers are like, got no choice. They're like, all right, well, if I want to buy this, I got to be willing to pay a premium. Last trade was at 1900. If I want to find a seller, I got to be willing to pay 1920. Someone trades it there. Next guy says, oh, he just paid 1920. All right, I'm going to go up to 1940, so forth and so on. When you get up to a resistance level where there's a lot of supply, the buyers can buy all they want. They don't need to worry about pushing the price any higher. So this is why you get a ceiling when we get to a resistance level. Now, a lot of times we sell off because some of the sellers, the people that want to sell, notice, hey, this thing got back to my level and now it's stopped going higher. Oh, there must be new sellers coming to the market. So some of the sellers start to kind of get a little bit worried and they start to undercut each other because the buyers are going to go to ever willing to sell the lowest price. So you get the snowball effect of the sellers undercutting each other. So you sell off. Now, that was March of 22. Let's go to this one day here, May 4th of 23. Got up to, guess what level? 2085. As a matter of fact, to be precise, high level 2085.40. Amazing. Market's this big, yet it stalls out within literally pennies of where it stalled out a year and a half before. This is what we call market memory. Some price levels are more important than others. Just how it is. Now, let's forward into early December. Guess what happened? We got right back to this important level. We made this big move higher and then we reversed. This is what we call a false breakout. Looked like it was going to break out, but by the end of the day, the sellers come in and they just knocked this down. All right. They just slapped it like it was, I don't know. I could use a vulgar term, but I won't. But anyway, let's just say they came in and slapped it down. So you would have thought on this day, oh, it's another up day. Opened higher. This is the opening price than the prior day's close. This is the closing price. But by the close, you turn it all the way around. Guess what, boys and girls? We are right back to that level. And guess what? Looks like once again we're going to sell off of it. So you might be saying, gee, Mark, this is great. What do you friggin' do? How do I take advantage of this? I don't trade gold futures. Well, if you're an options trader, or even if you're not an options trader, there are ETFs you can trade. So if you're an options trader and you think we're going lower, GLD is the Spider Gold Fund or Gold Trust. It's designed to track gold. You could buy options on this. You could even look at some of these inverse ETFs or ETFs. So I like this Direxon family. I don't have anything to do with them. I'm not endorsing them, but I just think they got some really cool products here. So you got Nugget and Dust. Nugget is designed to go in the same way as this particular gold miners index. So gold goes up, this is going to go up by roughly twice as much. Gold goes up 2%, this should be up by about 4%. Gold goes down, you have the inverse one here. Gold goes down 2%, this should be up by roughly 4%. So you can make money in a down market. You don't need to be a futures trader or an options trader. Just keep these on your radar screen. Then you have the junior gold miners index ETFs, which I assume that because they're junior, they're probably a little bit more volatile. Same concept though. You think gold is going to go down? You can put some money into your J Dust or your Dust, and gold goes down, this is going to go up. It's what we call an inverse ETF. And its leverage is going to go by about twice as much. Now, remember, leverage is great when it goes your way, but it could also hurt you too. I think gold is probably going to move lower. So make sure you check back and we will talk about it tomorrow and so forth and so on. And I hope to see you soon. Thanks, everybody.